Your notes are a must read. Today you call it survival mode. And ultimately, AI-related stocks are just getting hammered. Fundamentals don't matter.
Yeah, that's right. Thanks for having me. We're in one of those, nasty periods where they don't matter. They didn't really matter when the stocks were all going up and the momentum crowd was chasing these to new highs. Valuations didn't matter either. So it's a good reminder, although a painful one, that what goes up can come down. I've covered tech a long time, and I think this does happen, especially when you have these new exciting growth narratives like AI. Reminds me a little bit of the dot-com. I don't think this is anything like that, meaning it won't end that way. These companies are still reporting very good fundamentals, and the valuations are way lower than they were back 25 years ago. But it is crowded. It is a very popular trade, and it's not working, so it doesn't really matter what the companies say. But eventually it will, and I think that kind of comes back maybe later this year in the back half.
In the here and now, there's a lot of anxiety building about the competition in China. I spoke with Mike over at Iconic Capital yesterday. Mike Anders, who leads, of course, what is ultimately the family office of all tech billionaires. And this is what he had to say about DeepSeek. Just take a listen.
I think there was both a surprise in how quickly they were able to catch up, but I think there was also a lot of, the key takeaway was they can make this technology for cheaper than our models.
Yeah.
And this wake-up call around efficiency versus our brute force spending.
How much does that wake-up call matter to some of these US-based semiconductor names right now, Jordan?
It's a very good question. I think it did, a month ago or 2 months ago when we were at higher levels in these stocks. And this was much more novel or a surprise. I think now, as we get further along and we learn more about what China's doing and how they're training and creating models, leveraging basically these US large language models at much, I guess, faster pace and less expense. It is, creating maybe the view that the growth and size down the road could be smaller for some of these hardware semi companies. But that being said, on the flip side, it's creating, I think, more interest and excitement across internet and software, because those are the kind of companies that could dramatically benefit from lower costs, faster time to market. So it's kind of a double-edged sword, but good for some, maybe not as good for others. End of day, I don't see these US big, large cloud hyperscalers slowing or cutting back despite what's happening in China.
Jordan, that's exactly right, which makes me realize so many of these large companies that reported earnings last month mentioned that they were largely unconcerned with this DeepSeek fear that it would take away some of their demand. But all of a sudden, you're seeing more of a sensitivity. Is that going to persist every time China comes out with news about a new AI model? What can kind of overcome some of that sensitivity that we're seeing?
Yeah, I actually think the answer to that is it's not creating this shock factor with investors in terms of what it could mean. I think that it's evolving, and that's kind of the dynamic of AI, is that there's going to be news headlines and evolution that's going to be way faster than we've seen in other new areas of tech in the past. And investors are going to have to just deal with the volatility associated with that. But at the end of the day, if you listen to what these companies are saying, and a lot of them have been speaking at big tech conferences this week, they're all kind of saying the same thing, that, we're full steam ahead. We see a lot of opportunity to monetize AI. It's very early days, and we can't err on the side of investing and developing and spending less. We'd rather err on the side of spending more. So I think that's the backdrop we're in. Unfortunately, it's just we're in a market dynamic that's basically punishing these companies no matter what they say. But eventually, I think that changes and we get back to a more favorable backdrop.
Let's also talk about how President Trump is starting to ramp up commentary and policies really around boosting domestic production, and the companies that are perhaps benefiting from that, but also kind of seeing some pressure from other parts of the market. Do you think that his support for the industry, American companies and production, could perhaps outset or outweigh some of this anxiety that we're seeing every time China comes out with a new advancement?
Well, I think what we are seeing is that President Trump and his administration is taking a markedly different approach to AI than the Biden administration. And I think that's very good for these companies and the evolution in terms of this like arms race in AI, meaning he thinks this is critical technology. We have to be very supportive. And I think the restrictions or the controls against China or adversaries getting access to this is probably the biggest change. But I think that was going to happen no matter who was president and calling the shots. So my view, and I think investors' view, is that he's going to continue to do whatever he can to support, America leading or sustaining a lead and winning in this AI race. Doesn't mean China and other countries can't catch up. But if anything, they're going to continue to spend more of their own money,
right,
both in Europe and China, because they know now they can't rely on the United States. And in some areas, that's going to help, like equipment companies that sell the tools to make these chips, because more companies and countries are going to need them.
Jordan, I go back to your confidence for the second half, but in your note, you're saying this is a true crisis of confidence in the here and now. What gets us into that confidence in the second half?
Yeah, I mean, I wish I knew definitively what the catalyst or the event would be. And a lot of times you don't even know, but the stocks basically kind of tell you as they start to trade more positively on fundamentals that are constructive. And that's just a process. I personally think it's going to be more when we get middle of the year and NVIDIA is seeing an accelerated ramp in their new Blackwell product. That has multiple variants, either underway or coming out later this year. First quarter, you probably see that as their July earnings. But one of the things to remember is these stocks are very sensitive to earnings revisions. So when NVIDIA was beating and raising by 8, 9, 10%, the stock was legging up as more money came in. Lately, in the last several reports, they've beaten and raised, but it's been modest. Yeah, and you're seeing that even with the Mag 7. The beats and raises aren't as significant as they were. So if NVIDIA kind of mid-year, let's say in a quarter or two, aided by Blackwell, because the demand's there, they got to get the production, can start to beat and raise by larger amount. I think that causes, again, all these stocks to act better. But ultimately, that has to happen for these to kind of start to outperform again.